1.35 billion XRP just vanished from exchanges in 60 days. Not sold, not lost. Vanished into institutional custody vaults where it will never touch public markets again. While you were watching the price bleed from $2.50 to $1.87, the largest wealth transfer in XRP history was happening in complete silence. Whales accumulated 340 million tokens. ETF custodians locked away over 800 million XRP in the first 6 weeks alone. Exchange reserves collapsed 45%, hitting multi-year lows. And here's the part that will blow your mind. Institutions are now absorbing 12 million XRP every single day with zero signs of slowing down. At this rate, by mid-2026, over 2.4 billion additional XRP will be permanently removed from circulation. That's 10% of the entire liquid supply gone. And when supply disappears while institutional demand accelerates, price doesn't move linearly. It reprices violently. Some analysts are now saying XRP could hit triple digits, possibly 4 digits, not through speculation, but through pure mathematical inevitability. This is the XRP liquidity compression flywheel, and if you don't understand what's about to happen in the next 90 days, you will miss the greatest repricing event in crypto history. Welcome back. Hit subscribe immediately, because today I'm breaking down the structural forces that could send XRP to levels that sound insane right now but will seem obvious in hindsight. Let's get into it. Let me explain the flywheel effect in the simplest possible terms, because this is the key to everything. A flywheel is a self-reinforcing cycle, where each action makes the next action stronger and faster. In XRP's case, the flywheel works like this. Institutional demand through ETFs removes XRP from exchanges, shrinking the liquid supply available for trading. With less supply on exchanges, every new buyer pushes price higher more easily because order books are thinner. Higher prices attract more institutional interest and regulatory legitimacy, bringing more capital into XRP. More capital means more ETF inflows, which removes even more supply from circulation, and the cycle accelerates. This isn't theory. This is happening right now in real time with hard data. As of December 2025, centralized exchanges saw their XRP reserves drop from 3.95 billion tokens to 2.6 billion tokens by late November, a decline of more than 45%. Let that sink in. Nearly half the exchange supply disappeared in months. Where did it go? Institutional custody. ETF custodians moved 1.35 billion XRP into cold storage over 60 days, and it's not coming back. These tokens are locked in regulated products with long-term institutional holders who don't panic sell on red candles. Meanwhile, whales accumulated 340 million XRP between September and November, pushing total whale holdings above 7.8 billion XRP. These aren't retail traders. These are sophisticated players who understand what's coming. The flywheel creates a natural price floor because new buyers must bid against shrinking inventory. When fewer tokens are available for immediate sale, even moderate buying pressure pushes prices dramatically higher, and the ETF structure means these tokens likely won't return to exchanges for months or years, permanently tightening available supply and making every future purchase more impactful. Let's talk about the ETF Explosion because this is the primary engine driving the flywheel. By November 30th, 2025, US-listed XRP ETFs had amassed $628 million in assets under management, with projections suggesting growth to $6.7 billion by late 2026. Think about that trajectory, from 0 to $6.7 billion in under 18 months. Grayscale's GXRP and Franklin Templeton's XRPZ led the charge, recording combined inflows of $164 million on their debut day alone. The Rex Osprey XRP ETF, which launched in late September, already has more than $25 million in assets under management within its first week. Multiple sources confirm that XRP ETF inflows have reached nearly $1 billion cumulatively with zero net outflow days. Every single day has been net positive institutional buying, no exceptions. The daily average inflow into XRP ETFs is approximately 12 million XRP per day and accelerating. If this pace continues, institutions will absorb 720 million XRP in the next 3 months and 1.44 billion XRP in the next 6 months. Combined with the 1.35 billion already removed, we're looking at nearly 3 billion XRP exiting liquid circulation by mid-2026. But here's where it gets even more intense. 5 additional spot XRP ETFs from Franklin Templeton, Bitwise, Canary Capital, 21 shares, and CoinShares have appeared on the DTCC, signaling imminent approval. When these launch, institutional demand will multiply. We're not talking about doubling. We're talking about 5x to 10x the current absorption rate, as every major financial institution offers XRP exposure to clients. The supply shock this will create is unprecedented in XRP's history. Now let's talk about RLUSD, Ripple's regulated stablecoin, because this is the utility engine that makes the flywheel unstoppable. RLUSD currently has over $1.2 billion outstanding and is expanding globally with payment corridors in Japan, Africa, the European Union, Brazil, and more. Unlike speculative stablecoins, RLUSD is fully regulated and backed, making it attractive to institutions and governments. Here's why this matters for XRP. RLUSD creates predictable settlement demand for XRP. Every time RLUSD is used for cross-border payments, XRP acts as the bridge currency, providing instant liquidity between different currencies. As RLUSD adoption grows, so does structural demand for XRP, independent of speculative trading. Think of it as programmatic buying that never stops. Payment corridors using RLUSD and XRP settle in 3 to 5 seconds compared to 3 to 5 days with traditional banking. This speed advantage creates network effects where more institutions adopt the technology because it's simply better. Ripple CEO Brad Garlinghouse predicts XRP will capture 14% of Swift's payment volume within 5 years. Swift processes over $150 trillion annually. 14% of that is $21 trillion in annual transaction value potentially flowing through XRP. Even if actual adoption is half that prediction, the utility-driven demand would dwarf current speculative trading volume. The upcoming Genius Act and ongoing regulatory developments will enable RLUSD variants in major currencies including the euro, yen, real, and peso, positioning XRP as the bridge asset between multiple stablecoins globally. Each new stablecoin corridor multiplies XRP's utility and creates additional structural demand. This isn't about price speculation anymore. This is about XRP becoming critical financial infrastructure. Let's address what everyone is thinking. If all this is true, why is XRP still under $2? The answer is distribution before accumulation. Large early holders, including Ripple itself, have been systematically selling into the ETF demand to provide initial liquidity and avoid regulatory issues around supply concentration. One wallet that accumulated at 0.40 realized $721 million in gains at the 2000 level, reinforcing resistance rather than absorbing supply. About 37% of XRP holders have been sitting at a loss since purchasing the token, and many used brief rallies to reduce exposure and exit positions. This selling pressure has created a ceiling around 2.0 that's been difficult to break despite positive fundamentals. But here's the critical insight. This distribution phase is finishing. Selling pressure has collapsed 39% recently, indicating sellers are losing control and running out of supply. The whales who wanted to exit at $2 have largely exited. What remains are long-term holders and new institutional buyers who understand the flywheel thesis. Technical analysis shows XRP in a volatility compression phase with Bollinger Bands tightening dramatically. This pattern typically precedes explosive moves in either direction. But with institutional buying accelerating, exchange supply collapsing, and utility growing, the bias heavily favors upside. The 2.00 resistance that has capped price for months is weakening. Once it breaks with volume, there's minimal resistance until much higher levels because most historical trading occurred below $1.50. The next major resistance after 2.00 doesn't appear until $3.50 to $4.00, and even that could be tested rapidly in a supply-squeezed market. Now let's talk about the structural setup that makes 4-digit XRP mathematically possible, not guaranteed, but possible within specific scenarios. Current circulating supply is approximately 57 billion XRP. Market cap at $2 per token is roughly $114 billion. For XRP to reach $1,000 per token, the market cap would need to reach $57 trillion, which sounds absolutely insane until you understand the context. Global cross-border payments are a $150 trillion per year market. If XRP captures even 10% of that flow as the settlement layer, that's $15 trillion in annual transaction value. Assets that facilitate trillions in economic activity traditionally command significant valuations relative to their utility. Gold has an $18 trillion market cap despite being primarily a store of value with limited transactional use. If XRP becomes the bridge asset for even a fraction of global payments, stablecoin settlements, and tokenized asset transfers, a market cap in the trillions becomes feasible. But here's the more realistic near-term scenario that doesn't require XRP to become the global reserve currency. If ETF demand continues at 12 million XRP daily, that's 4.4 billion XRP absorbed annually. Current liquid supply on exchanges is 2.6 billion and falling. Within 12 months, institutions could control more liquid XRP than exists on all exchanges combined. When buy-demand outstrips available supply by that magnitude, price discovery breaks down. Market makers can't provide liquidity, order books have massive gaps, and price moves in violent jumps, not smooth trends. We saw this with GameStop. We saw it with Bitcoin when MicroStrategy started accumulating. We're seeing it now with XRP, except the scale is exponentially larger. Conservative analysts project XRP reaching $3.60 to $5 in 2026 based purely on ETF flows and exchange supply dynamics. Aggressive bulls see $8 to $15 if RLUSD adoption accelerates and regulatory clarity expands globally. The $1,000 scenario requires mass institutional adoption at the scale Ripple is building toward, which may take 5 to 10 years, but becomes more plausible every quarter as infrastructure develops. Here's what you need to understand about timing, because this is critical. The XRP Flywheel is in stage 2 of 5 stages. Stage 1 was ETF launch and initial accumulation, which happened in late 2025. We're currently in stage 2, exchange reserve depletion and early distribution finishing. Stage 3, coming in Q1 2026, will be widespread ETF adoption as the 5 new products launch and existing ones scale rapidly. Stage 4 will be RLUSD payment corridor expansion going mainstream with institutional settlement demand becoming visible on-chain. Stage 5 is the repricing event where market realizes liquid supply is permanently constrained and price violently adjusts upward. Most investors wait until stage 4 or 5 to enter, which means they buy at much higher prices or miss the move entirely. Right now, in stage 2, XRP is still accessible under $2 despite the structural setup being almost complete. The smart money entered during the legal uncertainty at $0.50 to $0.80. The next wave of smart money is entering now during the distribution phase at $1.80 to $2.20, understanding that once stage 3 accelerates, entry prices will never be this low again. Institutional players are positioning for 12 to 24-month time horizons, not weekly trades. They're building positions while retail is still skeptical and price action is boring. History shows that the best returns come from buying quality assets during boring consolidation phases, not during explosive rallies when everyone is excited. Let me give you the actionable framework based on conviction level and risk tolerance. For high-conviction long-term holders, accumulate aggressively between $1.80 and $2.20, treating any dip below $1.90 as a gift. Your thesis is that the flywheel is unstoppable and XRP will trade significantly higher within 12 to 24 months regardless of short-term volatility. Set no stop-loss if you truly believe in multi-year holding. For moderate conviction accumulators, build positions in tranches, buying 25% now, 25% if it dips to 170, 25% on a breakout above 2.20, and keeping 25% in reserve for unexpected opportunities. Your thesis is that upside is substantial, but you want multiple entry points to average your cost basis. For traders looking for technical confirmation, wait for a decisive break above $2.20 with volume, then enter on the first pullback. Your thesis is that you'll sacrifice some upside to reduce risk by waiting for momentum confirmation. For skeptics and those in cash, at minimum, allocate 1 to 3% of your portfolio to XRP as an asymmetric bet. If the flywheel thesis is correct, that small allocation could dramatically outperform. If it's wrong, you lose 1 to 3%, which is acceptable risk for potential 10x or higher returns. The worst decision is ignoring XRP entirely because you're anchored to past price action or don't understand the structural changes happening. What matters isn't where XRP has been, it's where the supply and demand dynamics are taking it. And every data point suggests those dynamics favor violent upside repricing in 2026. Here's the ultimate truth that separates those who will profit from this setup versus those who will watch from the sidelines. The XRP liquidity compression flywheel is not a conspiracy theory or hopium. It's mechanical, measurable, and accelerating. 1.35 billion XRP removed from exchanges in 60 days is a fact. 12 million XRP absorbed daily by ETFs is a fact. 1.2 billion in RLUSD creating structural utility demand is a fact. Whale accumulation of 340 million XRP is a fact. 5 new ETF products about to launch is a fact. The question isn't whether the flywheel exists, it's whether you understand the implications before the market fully prices them in. Institutional players positioned months ago. Whales are accumulating now. Retail will chase after the breakout. Where do you want to be in that sequence? XRP at $1,000 might sound ridiculous today, but so did Bitcoin at $100,000 when it was trading at $1,000. The people who bought Bitcoin at $1,000 weren't stupid or lucky. They understood supply and demand dynamics that others dismissed. The same opportunity exists with XRP right now, not guaranteed, not without risk, but structurally set up in a way that hasn't existed before in XRP's history. The transfer of supply from weak hands to strong hands is nearly complete. The institutional infrastructure is operational. The utility layer is expanding globally, and the supply shock is mathematically inevitable if current trends continue. The only question that matters is whether you position yourself before or after the market figures this out. That's the complete XRP flywheel thesis with all the data, mechanics, and implications laid out clearly. If this analysis gave you a new perspective on what's actually happening with XRP, smash that subscribe button because we do deep structural analysis that goes beyond surface-level price action. Drop a comment with your honest take. Do you believe the flywheel thesis, or do you think XRP will remain range-bound? I want real discussion, not echo chamber nonsense. Thanks for watching, and remember, in markets, the biggest opportunities always look obvious in hindsight but controversial in real time. This is one of those moments. I'll see you in the next one.